Hello and welcome to another Major Market Movements video blog update for August 13th, 2014. I'm Quad G. Today we're taking a look at the Dow again. Previously, I had pointed out in a July blog post that the Dow was moving up into some negative divergences in the oscillators, the RSI and the MACD, which I'll show you here. And go back and review. See, we had this choppy move upward in price, but in the EWO, which is the Elliott wave oscillator, we saw lower highs creating a negative divergence. And now with this recent sell down, we also have a negative divergence on the bottom side, which is the following side between this swing low and this swing low. We have a higher low in the price, but a lower low in the oscillator. And you can see the same thing playing out in the RSI here, the negative divergence on the top, and then we got a follow-through divergence on the bottom side with a lower low in the oscillator, even though we have a higher low in the price. And then the same thing here with the MACD. We have negative divergence on top and on the bottom. So with this follow through to the downside, let's go back to my Elliott wave chart. I want to point out the very nice ending diagonal pattern that we have here. It's very textbook in the way that it played out. Ending diagonal is 5 sets of 3 waves that play out into a narrowing pattern like you see here. So wave 1 has 3 waves up, A, B, C. Wave 2 has 3 waves down, A, B, C. And then we have wave 3, which ended up being basically a double 3 or a double zigzag to the upside with 2 sets of 3s. And then wave 4, played out sideways with a flat correction at ABC. And this is important because it improves the probability of your Elliott wave count when you have wave 2 and wave 4 alternate in modes between sharp and flat. And so with wave 4 making a flat correction, contracted sideways flat, that alternates with the sharp in wave 2, and then wave 5 was also a final 3 waves up with an ABC. And then also, the other thing that I was paying attention to here was the fact that this trend line over the course of the last several weeks had been tested 1, 2, 3, and the rule of 4 suggests that anytime a trend line or a point of resistance or support is tested the 4th time, the probabilities are high that it's going to be broken. And sure enough, that rule played out nicely here with that trend line being tested a 4th time. We did in fact see the breakdown. So going forward from this point, I think I see 2 different scenarios playing out. The red scenario would suggest that this impulsive move down will continue with a shallow retrace here. We should see another continued impulsive behavior to the downside. It should be able to break key support here at 16,015 and head to 15,600 or lower. If that was to take place, that could set up a right neckline of a possible bearish head and shoulder pattern. With this being the left shoulder here, this is the left neckline. This would be the head, and then we've come down into a right neckline, and then we might see a bounce up into a right shoulder later on, possibly in October. If that was to take place, that would increase the probability that we do have a major top in place, and we could see lower lows to come into 2015. If, however, we see a larger bounce up in the price of the Dow, possibly up into above 1650, 16800 or higher, and then another drop down that is able to survive above 16,000 in a three-wave pattern to the downside. So we basically have an A, B, C to the downside in a corrective three-wave pattern. That would increase the possibility that we could still see a higher high in the index into October, possibly up to 17,400 or higher. So things to watch for in the weeks ahead, coming into the last quarter of the year. Okay, so that's it for this blog post. I hope you found it informative. Thanks for watching. We'll talk to you later.